Good afternoon. It is 4 p.m. in Singapore and Manila. Welcome to our Radio Finance Virtual Dialogue, Scaling Digital Transformation Amid Strong Regulatory Impetus in the Philippines. We have with us a distinguished group of senior executives in technology, operations, and digital banking from leading financial institutions in the Philippines. They will share with us their perspective on the next steps in digital transformation journey and how they are redefining technology, processes, and customer experience. I am Nidhi Agarwal, Senior Research Manager at the Asian Banker, and I will be your host for the next 60 minutes. So in today's session, we will take a deeper look into the opportunities created by the emerging technologies, and we will discuss how the progressive banks in the Philippines are designing their digital strategy to better position themselves in the coming decade. And the topics that we'll cover today are how banks are enhancing operating model by utilizing cloud, becoming digital first, how they are leveraging advanced technologies such as AI, APIs, robotic process automation, and real-time collaboration to accelerate their digital transformation, and what is next in digitization of core banking services such as lending, deposits, and payments. So we hope to have a very engaging and interactive discussion and strongly encourage questions from the audience. The virtual dialogue guests, they can participate by sharing comments and questions with our panelists by using the raise hand or chat function on Zoom. While the ones who are listening via Facebook, they can drop theirs in the comment section. I will take this opportunity now to introduce our guests. We have with us Henry Aguda. He's Senior Executive Vice President, Chief Technology and Operations Officer, and Chief Transformation Officer at the Union Bank of the Philippines. John Howard Medina. He's Chief Operations Officer at Philippines Bank of Communication. Noel Santiago. He's Chief Digital Officer, Senior Vice President and Group Head of Digitization and Channels at Bank of Philippine Islands. Arivuvel Ramu. He's Chief Technology Officer at Tonik, which is the first digital-only bank in the Philippines. Henry Antonio. He's Advisor to the Chairperson on Business Transformation Projects at RCBC. And we have Rajashekara Maiya. He is Vice President, Global Head for Consulting at Infosys Finacle. Thank you so much, everyone, for joining us today, and I look forward to a lively discussion. So the Philippines financial sector has emerged as a hotbed for innovation, driven by strong digital growth and regulatory impetus. Over the last few years, banks in the Philippines have been digitizing rapidly to thrive in an increasingly complex and competitive environment. The industry dynamics are changing. The country grapples with significant low financial inclusion, with 70% unbanked population. 69% of adult population in the country has access to mobile phones. 53% use internet, but less than 10% use it for financial transactions. The central regulator, BSP, has now set the target for digitization of 50% of the country's retail transactions and financial inclusion of 70% of Filipino adults by 2023. Towards this, the regulator has also paved way for the entry of new digital banks that disrupt traditional models with agile services and lower operating costs. There is also rapid growth of fintech that address customer pain points innovatively, use data more effectively, and forge new business models. All this has changed the customer expectations towards more personalized and contextualized and seamless service experience from their banks. Meanwhile, the digital transactions and e-payments have surged amid the pandemic. InstaPay transactions grew by over 450% and PesoNet by 375% in 2020. So now to succeed and scale in this dynamic environment, banks need holistic transformation that encompass mindset and cultural change and a shift to customer-centric processes. More importantly, this needs the foundation of agile, scalable, and secure technology to meet the evolving customer and efficiency needs. BSP has also been quite proactive in supporting the adoption of emerging technologies such as cloud and eKYC to enable banks for this digital future. So the first topic that we are looking to discuss today is how banks are enhancing their operating model by utilizing cloud. So events of 2021 have actually accelerated the pace and trajectory of digital transformation across the industry. Now, as you seek to speed the digitization and enhance customer engagement, I want to ask banks how they are adopting cloud technology to drive digital-first operating model, deploy new applications, and to improve their scale and efficiencies. So perhaps, Henry Aguda, perhaps you can share with us what has been the experience at your bank with cloud-based implementation. And could you also share some of the tangible success stories with us?
Hey, Niti. So again, good afternoon to everybody, fellow panelists and everyone that's watching. On the cloud, it's been a very instrumental thing for us in Union Bank in order for us to accelerate and make our infrastructure resilient. You know what they say, you're only as fast as your infra. So just to give you an idea, 5 years back, Union Bank owned its own data centers. So 99% of our computing platform were on-premise. And then, we started moving out from our physical data center to outsourcing it to eventually having a cloud-first policy where we've started moving our computing packages to the cloud. And the promise of our technology team is in 2 years' time, we will now have a cloud-only infrastructure. I think the only thing that we've not moved to the cloud is our main CASA. And our friends from Finacle knows this. We're hard at work trying to move the core of our banking infra to the cloud, and we feel that once it's been moved to the cloud, we'll claim that our infra is purely and the new generation infra. Now, the advantages of which has been during the pandemic, it has really helped us a lot with our work from home infrastructure, allowed our employees to connect their current broadband services from home directly to the cloud instead of going to the data centers that we have, allowed us to conserve our bandwidth. And, you cannot talk enough about how resilient the cloud infrastructure is. So when it comes to speed and being able to be agile as well as being able to scale at will, our cloud infra has actually helped us a lot.
Okay, that's great. So, and a very important point, you are only as fast as your infra. So also tell us, this is a big journey moving totally to a cloud-only infrastructure. What were some of the significant challenges that you faced in this journey?
Well, the biggest one is not so much the infra as the readiness of the systems themselves. 5 years ago, the infrastructure that are ready for cloud are the cloud native ones. Most of them are productivity tools, the usual office email, chat, and what have you. It's only in the past 3 years where the core systems are now adapting to the cloud. So the biggest challenge is that the migration of an existing system to the cloud. In fact, it's easier to move to the cloud if you're greenfield, but if you're an operating bank like ours, where we have a lot of legacy infra and database, and where it's like changing your wheels while driving 90 miles per hour. So that's the biggest problem, and that's the biggest fear we have. It's problems with the migration if we encounter any.
Got it. Okay, perfect. So at this point, I'll like to invite John to also share about, how Philippines Bank of Communication, how you have been shifting your system towards cloud. What has been your experience? And are you also facing some of the challenges that Henry talked about? How are you addressing those challenges?
Well, Henry was correct when he was saying it's easier to spin off a greenfield instance on the cloud rather than moving the bank. So what we did was we did a hybrid approach. We spun off a separate instance of our core into the cloud on a latest release. so that we could service our newer initiatives. So in effect, we created a bank within the bank that was on the cloud. We did this in 2019, and this was just in time for the pandemic, because we went live at the end of 2019. And when 2020 came around, it was easier for us to pivot several of our products and services on this cloud instance. And when there was a spike in electronic transactions during the lockdown last year, it was easier for us to scale up in terms of capacity and bandwidth, because we had a separate instance for a lot of our retail initiatives on the cloud.
Okay, perfect. So yeah, I mean, that's true, especially during the pandemic, as Henry mentioned, and as you've also mentioned, it's the bandwidth and the scale and the agility with which you could bring about the change that's quite important. So you've adopted a hybrid strategy. Is it also a multi-cloud strategy?
No, we are running on one of the major cloud providers, and we're running a SaaS model, which makes it easier for us to, I guess, pivot from one side to the other.
Okay, got it. Okay, so Ramu, I would love to hear your comments on this. So you've launched first digital bank in the Philippines, which is also primarily cloud-based, and we heard that it's relatively easier to for a greenfield project rather than, as previously mentioned, for an existing bank. Share with us, how are you implementing digital first strategy? How do you plan to differentiate your service and customer experience to achieve scale? And how are you building the technology as an enabler for this pure digital strategy?
Thank you, Niti, and dear friends. I'm humbled to share the dice with you guys. Tonik, most of you know, first digital-only new bank in Southeast Asia, and we are operating last 6 months in Philippines, and privately owned a bank, and the HQ is based out of Singapore. I proudly say the bank born in cloud, and I designed from day one, zero on-prem infrastructure specific to customer. We put the infrastructure only for the employees to connect and operate and work, but the customer gets 24/7. It's built on multi-cloud strategy from day one. What does it mean? So we looked at the customer-centric design, not started from technology, start trying to look at the solving real people problem, and looking at mass affluent and financial inclusion, which you rightly talked about in the beginning. Today, people need help for saving, not the bank CASA account, coming to branch with a good dress, waiting in a queue, opening, filling the forms. So you have to fix the eKYC problem. Need a quick cash, which means underwriting problems, not 10 days waiting for banking procedure. Easy to move money. I have 7 years coming back and forth to Philippines. My first customer is Henry, which is there in Union Bank. So if you look at the design experience on early in Philippines, for opening a payee registered account, I need to go to the branch, fill the form, adding the payee, how painful it is. So we looked at the customer centric. I want to design a bank which is mobile only, fast onboarding, higher interest rate, so people get a better benefit, no fee model, easy to move money, and localized, hyper-personalized experience and product. This problem, we tried to put it into technology. One is, the key thing always start with lower the cost so can pass the benefit to customer. And that require agility and innovation. So now if I put that into customer-centric way, the customer voice to be reflected first, what it means, I need to get the customer feedback, build it in a technology which can be agile in mode. That means every 2 weeks I can able to incorporate the customer voice, build it to a new feature, I can able to roll out. That means I need an infrastructure and development process which can do the faster rollout development. And second, design thinking and customer empathy, the needs and wants, quick prototype, test, pilot, scale, fail fast, adaptation. Now that I will bring the agility and speed, which is key for innovation, which tightly coupled with the infrastructure. When I say infrastructure, we chose cloud native and multi-cloud, best in breed. And if you look at it, I have workload running in AWS and Google Cloud and Azure in a secure way. And which you look at, for example, to increase the speed, we use a CI/CD pipeline with the DevSecOps, with the blue-green deployment, and auto scalable infrastructure. We call it as infrastructure as a code, which is Terraform, all this one-click deployments. So it can reduce greatly the deployment time. The cloud security, especially dedicated instances to ensure the production environment is safe and not easily touchable. Open APIs are built and exposed over microservices. So it's all containers and, if you hear about serverless architecture, which has been built, most of the APIs can perform in a higher thing. And SOC 2 compliant to ensure we are not compromising on security, even though we are running it. This is the next big part is our cost saving, which is I worked with the vendor who can do hosted managed service, where I'm taking one piece of component, the engagement layer can be built by us because that's our heart and soul, our brain. But the second time, the system of records and operation can be given to hosted managed service so that the low reduced OPEX and optimized CapEx. So it will, I can say, I have very, very minimal CapEx and reduced OPEX in a tier-based pricing, which gave you the better benefit, which means you can say a bank launched less than few $1 million.
Okay.
That makes a history. So this helps that's all goes to cloud-based technologies today. And we haven't expected this whole pandemic. Luckily, we built that whole thing is in a virtual-based mode. So when the pandemic comes in, the whole bank's built in a remote location and launched it, which is a historical event for us. Even we couldn't believe it. Without seeing each other, we can able to build and launch something, a new bank. So that is the kind of things I would like to share today. Thank you.
Got it. Okay, perfect. So hyper-personalization, design, and agile, definitely those are very important things to address. Also, give us tell us briefly about the business growth and customer traction you've received since you've launched. How are you addressing the challenge of building trust among the customers, to shift towards a pure digital model?
Yeah, amazing. The initial biggest challenge in front of us is the traditional banks are built with the big buildings and multiple branches and human touch point to build the trust. For a virtual neobank is the big challenge is how to build the trust. So why I need to choose tonik to put my $500,000 money? Probably Noel put, I don't know how much, but the trust building is multiple angle. Number one is the customer-centric hyper-personalization service, which I talked about, content delivery. How you connect the customer to the virtual bank to make them feel this is bank for me. That is the messaging need to be connected. So how the human personally talk to the customer, how this can be virtually talked.
Okay.
This is one aspect. We did a lot of research, part of focus group and things. For example, if you see most of our people call Zozo, love you. So this is the very connective, juicy words to connect people personally, number one. Number two, the application built with internationalized secure technologies. For example, when I put mobile first, I didn't put just by word. If you look at it, the whole mobile app is secured with a class A technology from the app is completely secured in terms of, there's a company called Wiki in Singapore we are using for complete mobile app protections and thread handlings. So second, we use, even for onboarding, we little used different technologies. For example, liveliness detection. It can detect you are a real human or not. And second time when you come back, I can detect you whether you already have a bank account or not with the same face, which is all advanced technology. We call it as 3D liveliness detections through AI machine engines. So then we have deduplication check based on your, not your IDs, based on your face, biometric. This is the kind of technology helps technology, fraud management, and trust building for the customer. Money is safe. Third message, last one is giving the control to customer. Today, if you want to lock you, unlock you, any part of your applications, a card, for example, if one of the customer opening a virtual card, and I can lock different type of capability in my app. So don't want to use my card in any e-commerce. I can go on to lock my card. When I want to use, I can turn it on. So you empower the customer.
Got it. Perfect.
Building trust. Thank you.
Got it. Okay. So, Noel, if you can also share with us, how now that we have got digital first propositions entering the market, so how you're building your cloud strategy, and also, there's this question about IT outsourcing and concentration risk, because as we've heard, it's not always multi-cloud or different. It could be. So there's a risk element attached to it as well. So if you can address that and briefly, please. Noel? Yeah.
We started, IT outsourcing has been there for the last, if my memory serves me, the last 20 years. No? And,
yes.
And BPI has been one of the first who have embraced that. That was even before cloud computing came into the picture, right? So we embraced that outsourcing with its promise of efficiency, better run capabilities coming from the people who does that for a living. No? So it's more like getting the best people to run your infrastructure. Right? The world has changed since then, right? Now we are taking a opportunistic approach in the way we will enhance our capability to deliver products and services to the customer by looking at what are the platforms and systems that is due for replacement, and take that opportunity to make it as a service, and if possible, I mean, the extent is as a service, and if not, if it's still our own run platform, how can we move them to the cloud, right? So that's on the production side. We also look at capabilities from within our own internal needs, right? Office automation tools, workplace solutions, right? They're all moving into the cloud right now. As we speak, we're replacing all our internal platforms into a cloud-based solution. Our customer servicing platforms right now, from the contact center all the way to the branches and the various touch points, are now running on a software as a service solution. Our technology development environment, it's been moved to the cloud. Now, what we are still looking at is some of our legacy systems. 170-year-old organization carries a lot of tradition and prized possession, right? Some of them are our legacy platforms.
That's true.
That was architected and developed way before cloud computing was foreseen, right? So we have to look at that and say, can we chop it down into smaller pieces that would allow us to progressively move with the minimum risk in customer disruption? So that's the strategy that we're working on. Opportunistic in the new things that we need to put forth. And then the big ones, we bite the elephant one piece at a time.
Okay, got it. Perfect. So one piece at a time. So, and you brought about the very important thing that we've heard earlier also about the legacy technology and the challenges that come with it. So, Maiya, at this point, a quick perspective from you on how to handle this kind of challenge that comes with the migration of technology when banks have an extensive legacy technology, and how can that challenge be addressed?
Okay, thanks, Niti, and thanks Radio Finance for giving us an opportunity to talk in this forum. So From our own experience, we have seen that there are two sets of banks, which basically looks at in terms of how to transform themselves in the larger context of a digital. The digital transformation, in that journey, cloud is one of the primary pillar, you can call it as. So the two sets of banks are, the first set of banks is a traditional bank, as I think Noel mentioned about banks which have a lot of legacy environment, and they are not ready to move into a cloud overnight in a one weekend. All customers, all branches, all transactions are moving, because it requires that kind of a risk management, and many of the applications are not built for cloud, as Noel mentioned. So these kind of banks, what we are witnessing is they're taking a progressive modernization approach, a component by component, a module by module kind of a movement to a cloud. And that also happens with respect to looking at whether those applications that have been there in the bank IT landscape for a long time, can they convert it to be a microservices-based architecture, or can be APIs can be built around it. So all of those experimentation is happening, and it takes time. And these set of banks are looking at in a progressive modernization. The second set of banks that we are witnessing is banks which are digitally native. That means they are from day one wants to be on a latest technology. They don't want to carry anything which is not core competency to them. And these banks are looking at to offer limited banking functionality, but starting with technology on a big scale. And today, compared to 5 years, 10 years kind of a scenario, you have all elements that are available in terms of what it requires for you to be a digital native, whether it is in terms of the cloud infrastructure service providers, whether in terms of the application service providers, the entire ecosystem of the fintechs and the startups, which was missing 5-6 years back. They're all available now in a ready-made kind of a plug and play kind of a situation. So we are seeing these kind of banks are much faster in their adoption to the latest technologies and in their digital journey of being digital native, and cloud still plays a major role in their environment. And for them also, it is equally important to be the cost neutral, or if at the most cost effective, because they'll not be able to afford an on-premise environment to be maintained and run by their own IT staff or somebody else. So they want to make sure that whatever core to them, they retain it to themselves, and whatever not core to them, they want to now outsource it to the cloud service providers. And this also provides them the assurance in terms of the safety, security, because many of these hyperscalers, they have invested huge billions of dollars in making sure that their technology landscape is secure, and they have communities which support them on a split-second basis, in a real-time basis. I think that is what's also coming in to help these smaller banks to looking at moving into that. See, in this smaller banks journey, we've also seen some of the traditional banks trying to test the weather by putting in bank in a bank, or a offshoot of their environment, so that all the new accounts, new customers, new processes can be carried out on a new environment, which does not have any dependency on the legacy or does not carry any baggage, so that they can start off the journey, and slowly, when they are moving towards the transformation, move module by module or a component by component to the new technology landscape. So we have the traditional banks looking at progressive modernization, also trying to test the weather, having a digital native bank. Then you also have a completely different breed of banks, which are digitally native challenger banks from day one, utilizing cloud. And this is what we have been witnessing in the last 2.5 years, Niti. Thank you.
Okay, perfect. So that gives a good summary of different models that banks could be adopting in terms of their digital journey and adoption of cloud as to how they would go about it. So at this point, I'll request our attendees to answer a short survey question that we have, which will come in the pop-up window. Team, can we have that question here, please? Yes. So are you looking to make new technology investments to support your ongoing digital transformation efforts? And if you could just tick that, and then once we compile the results, we'll share that later with you here in the same session. So, okay. So in the meantime, let's move ahead. Now, we're talking about implementing AI and RPA effectively in your digital transformation journey. So I like to hear Henry Antonio's view here as to, share with us some of the tangible stories as to how you have implemented these technologies to bring about, to improve your customer experience and customer convenience at the bank. Henry, yeah, you need to unmute, please.
I'm sorry, Neet. Specifically on AI and RPA, the bank has taken an approach on RPA specifically to improve a lot of our internal efficiencies in terms of processes, particularly when there's a lot of manual processing involved, whether it's in the controllership department, whether in terms of processing customer transactions. So we've been looking at specific process and functionalities where we can automate those functionalities so that we can remove the manual interventions of individuals, or even actually those kinds of processes which will require batching processes, and we could actually do it more real time. The pandemic actually is a great example of where we've had to very quickly do some changes using RPA to help us improve and to try to manage the provisions of the Bayanihan Act, which allowed a lot of the consumers to defer their payments. And so you can imagine if you had an existing system that have a fairly structured way of computing interest, penalties, and whatnot, and then you had to apply laissez-faire on an optional basis, all the provisions of the deferment of loans as required by the Bayanihan Act. It creates a lot of chaos in terms of managing our loan books. And so what we've been able to do is use RPA essentially to help us automate some of these functionalities without disrupting our core systems in loans management. In terms of AI, we're fairly, I would say we're fairly conservative in terms of our approach, in terms of artificial intelligence. We're using more and more technologies, particularly in the customer experience, to sort of help direct a lot of the routinary questions to chatbots, to some managed service, so that we don't have to necessarily use individuals to essentially do these kinds of tasks. So that's where we're sort of playing with respect to these particular technologies right now.
Perfect. So, so it's towards improving your operational efficiency and as well as, digitizing the entire conversation with the customers. Got it. Okay. At this point, I have a question from audience as well. With successful implementation in the cloud, how do measures and balance? How do you measure and balance your risk appetite implemented in the cloud? So, Henry, would you like to add to that as well?
Yeah, actually, I saw that question and I was intrigued. With due respect to the person asking it, it's actually a mindset, because some people have the mindset that going to the cloud is riskier. In Union Bank, the reason why we're moving to the cloud is we feel that more so because of the pandemic, it's the safer choice. Imagine how many banks have we heard having problems because they had to man their on-premise data center. During the pandemic, since most of our processing packages are on the cloud, we didn't have to worry about infection rate about our people against our people and risking their lives going to the data center. So balancing risk, actually, if you implement it correctly, of course, there's a risky way of going to the cloud. One is go with a very trusted cloud provider that has been vetted and acknowledged by our regulator as safe and permissible. Have a very experienced partner to do the migration, and have a strong risk organization internally in the bank that would oversee all the changes that you will do. So actually, if you do it right, from a risk standpoint, going to the cloud is a much safer and more sustainable approach.
Okay. Yeah, I mean, so that's a fact. So there are different angles of risk to it. While it has, as I was mentioning earlier, there's also that risk of concentration risk with regards to IT vendors, and so you have to keep that in mind as well. And variety of risks need to be balanced with the customer convenience when you are implementing these technologies as well, right? So.
That's a very good point. The concentration risk is also something that we're concerned with. That's why it is also recommended for you to diversify your cloud provider. So no cloud provider will be good for everybody, and no cloud provider will be good for everything that you need. So you're right. That's one way of mitigating the concentration risk.
Got it. Okay. John, perhaps we could hear your views about API and open banking for innovation-led growth, how to deliver a personalized engagement using this open banking. And, also, how do you address these challenges with regards to infrastructure, connectivity challenges when you're building your technology around open banking?
Well, our experience with exposing banking services to our partners via APIs was interesting over the last 2 years, because you take the telecoms infrastructure for granted nationwide. You have a very strong cloud backbone. You have good connectivity with your partners. But when your partners have 400 or 500 branches across the country, the last mile to the consumer is the critical failure point that you don't really see when you expose banking services via APIs, because they're at that point where in a physical location, they're going to consume a service, but that service is not getting to them because of the last mile. And we've had that as an interesting, I guess, lesson in providing open banking. Also, what we noticed when the open banking extends beyond the device screen or the website, when the open banking service is now consumed at a physical location, you now have to work with your partner in terms of the customer experience, because a customer that is doing a payment or drawing against a loan at a physical location via an API thinks that service end-to-end is the bank. Not just the partners as the last mile. So you work with the partner also in improving the customer experience, because in their mind, an MSME that's paying for inventory via a web service or an API at the delivery point thinks that's the banking service, when in fact there are many intermediaries, the logistics, the fulfillment, the ordering of the partner that come into play. And so you have to work with all of them in managing the customer experience and improving it and learning from it. So we've had to adjust APIs and web services based on the feedback of customers in the front lines. And so I think that's the lesson I think that we've taken away in the last 2 years. It's a different ball game when the consumption of open banking is bridging virtual to physical.
Okay, so and when we talk about open banking, the other angle that relates with cloud as well, and one of the questions that come from audience as well is around data security and data privacy. So especially when you're using cloud and when you're using open banking as well. So how do you handle that?
Well, we've never really been alien to the concept of cloud, because over the last 10 years, PBCOM has not had a physical data center. We've outsourced our data centers and we moved our servers 10 years ago to a virtual environment, which in effect is an on-premise cloud infrastructure. So for us, it was a natural extension to move into the cloud for several of our applications. And because we were in that mindset already before, that we don't own the entire picture in terms of infrastructure, right? We've taken steps over the years to address data security leaks, third-party risk, redundancies, et cetera, which become very, I guess, glaring when you're first moving into a cloud instance, because you're not built for that as an organization. But for us, because we've taken a 10-year journey from virtual environment to cloud, it wasn't a quantum leap. It was a gradual, I guess, progression. So the risk management was always there. The recognition that the risk of a cloud provider is not much different from an outsourced data center.
So that's true. I mean, well, the fact is that banks have to look at risk from a variety of angles. You know, it's not just the technology or this angle, data privacy, but it's also the fact that the whole migration as an exercise, the way you're shifting to these new technologies, you've got these emerging technologies, but how to implement them in such a way that the potential risk for the organization is especially things like cybersecurity risk, which we all saw really surge during the pandemic. So
and you don't have to do, you're not supposed to do this journey alone. You're supposed to work closely with your regulators.
That's true.
So you have your government agencies for data privacy, you have your regulators for the banking industry. You also have third-party associations that manage cybersecurity risk, et cetera, et cetera. So you don't do this journey alone. You have to leverage on the people who regulate you and the people that can help you address the different risks.
And you have to also meet the evolving regulations with speed, which is also a challenge for most
regulators. Yeah. You're not surprised about any change in regulation. They actually vet the regulations with the banks in advance. So you're not going to be surprised when they come out. And there's a collaborative, interaction where the banks also give feedback to the regulators in crafting these regulations.
Got it. Perfect. So Maiya, at this point, a brief comment from you as well on the potential risks that banks need to be cognizant of when they're implementing these new technologies, and how do they build their technology and processes to adapt to these new applications securely.
Thanks, Niti. I think I completely agree with what John mentioned in terms of the collaborative way to look at security with these central agencies. But if you look at now, coming from a background of serving banks in 100 countries, or 100 countries, we have seen various ways the security elements can be addressed. And as you rightly mentioned, during the pandemic, because more and more things are moving toward digital, the other element of that, the cybersecurity issues also cropped up a big time. I think there are two things that the banks need to do it, and this is what as a best practice that we have seen from our implementation experiences. One is in terms of a comprehensive, holistic education, both inside and outside of the bank, about the security threats. Outside with respect to the consumer, whether the retail consumers or corporate consumers, in terms of how to protect their identity and how not to reveal some of the elements that bank provides in a confidential kind of a thing. The second thing that banks also need to look at is in terms of always look at security as a journey. No bank in the world can claim that they have reached the destination as when it comes to in terms of a security. So it is a journey. In this journey, you have to keep experimenting. If you now look at in terms of around 10 years back, all that was required for you to withdraw cash from a bank is either a signature that matches the signature that you have signed when you open the account, or if you go to an ATM, it is basically the PIN that matters. But today, most of the global regulatory agencies have come out with a multi-factor authentication or a two-factor authentication, so that you are able to manage the additional risk factor by having one more authentication provided by the customers. And at the end of the day, if you now look at the security is a matter of three things. It's basically verifying what you are, what you have, and what you know. So if among these three things, if banks can select any of the two things and make it as a workable solution with a convenience, because security should not become an impediment for bankers to offer it and as well as the users to use it. So it could be a convenient marriage between the security and the convenience coming together. And we have seen that there is significant development in this area. As John mentioned, there are a lot of ecosystem partners who take care of the security. The hyperscalers, when it comes to in terms of the cloud environment, they have built world-class securities in terms of logical access control, physical access control, the data transmission layer. And they also have huge investments either in the community or on the infrastructure itself, which should provide the required confidence for the banks to go ahead and implement things on cloud, because that is the way forward for the banks to be more effective, relevant, and contextual in the changing dynamics of the global banking environment. I'll pause here. Thank you.
Great. Got it. Okay. Now at this point, I also want to talk a bit about, the impact of digital transformation as such on the business. How to design your or digitize your core business of lending, deposits, and payments, and move towards to see the actual business impact that you're looking for. So perhaps Noel, a perspective from you on this. So digital is really a moving target. All banks have set up a promising target or targets to achieve in terms of digitization. How do you actually achieve them? Where are you on this journey? And tell us a bit about that.
Talking about the lending space, right? If you look at most of the players, they tend to draw their lending business from the accumulation of data, right? It's more of a data-driven kind of a business model. And with the amount of data that they are collecting, both within their ecosystem and partner ecosystem, that's how they're able to determine the viability of that business, right? And this is where AI analytics and all this technology comes into play, right? So everybody is banking that with the richness of the data that they're getting, their ability to understand the credit risk that they're taking against the opportunities in the market would have a higher chance of success. So again, everybody is looking at data as a way to accelerate and make their lending capability more accurate and predictable.
Perfect. That's true. Data, as they say, data is the new oil, or probably the most important resource for the bank. So but the question is also to have the right data infrastructure and how to utilize that data infrastructure effectively to have that kind of a business outcome. And that's always been a challenge. It's actually a moving journey for banks, especially the amount of data that they have access to now, both structured and unstructured. So to have that kind of infrastructure around it, to be able to bring the business impact from that huge amount of data that they have, that's also a challenge for banks, right? So
yes, and the key there is the data is only as good as the people who's asking the question, right? And people who's looking at what does it mean. Sometimes you get overloaded with so many data, but you don't really know what you're looking for unless you ask the right question. So it requires certain maturity as well within the organization to start asking, right? And also appreciate what are the findings and insights that the data scientists are giving you, right? So it requires a two-prong or a multifaceted approach. Somebody who's from the business side who's asking the right question, and the insighting coming from the data scientists and saying, this is our findings both from the direct data, the aggregated data, and the proxy data that we have, right? Does it mean anything to you? Right? Can you derive value in this kind of
value? True, totally true. So we have a question from audience, and which is Henry, Antonio, specifically for you. So we would like to get insight from RCBC, as we have seen talks about robotics, and how do these things from various press releases they've seen this thing. So they would love to hear from you in terms of practical cases where the bank is leveraging on this, and
sure.
Understand more about that.
I mean, I could give you at least 3 examples. One very simple one that we've done is in terms of internal processing on withholding certificates, tax withholding certificates. This is in the controllership area. One of the things that you could do very quickly is you pretty much have a consistent alpha list of people that we withhold pulled from. And there is a whole process of actually performing the data entry into the forms. As you know, the BIR still requires us to do that. And then physically providing these forms to the vendors or to the people that we've withheld amounts to. And so we essentially use robotics to essentially pull this data, put it into these forms, and then trigger that so that it's sent, so that there's no more individuals actually essentially stuffing envelopes and sending them over. That's a very simple, very useful and very productive way of using RPA in very, very simple processes internally within the bank. Another way is essentially, obviously, trying to put AI and RPA in use in terms of the customer service, right? I mean, there are many, many basic processes that the banks have to essentially respond to with customers. It's statement of accounts, requests for certain things. And if we're able to use robotics, essentially automate our chat buttons to be able to answer these things, it takes out quite a bit of the resources necessary to manage our customer service. And then our people can move to higher level of services where you have more complicated transactions, where you actually need individuals to look at it uniquely and then address the client's requirements. So it could span those different kinds of requirements. It could also be as simple as, you have a very routine process within your system, particularly if you have a lot of legacy system, which if you're a mid-size or a large bank here in the Philippines, you would have. There are a lot of processes there that are routinary, that you consistently have to do for every transaction. And those are really great opportunities to develop RPA. The other thing I kind of want to share here, because I'm more of a strategy guy and a finance guy before technology. And so my approach is a little different. When we talk about regulations and we talk about technology and applying technology, I think the biggest risk for us really is to find how we define our strategy, right? Because as I agree with my colleagues to say, if we were a greenfield operation and we're starting today, it's easy. It's easy to make a decision to do this, and that, and then just be at the cloud, do everything streamlined, no paper, etc. But when you have a legacy business with brick and mortar branches, with individuals working there, with clients that expect a certain service, it is a hell of a lot more complicated than just moving everything into a digital space. And so fine-tuning that strategy, managing the resources, and actually making sure you understand what the shareholders are willing to risk in terms of resources, in terms of investment, because technology is changing very quickly. And you might not have 10 years for an ROI to make sure that everything is paid for. And so you just can't, you talk about concentration risk. Well, this is one concentration risk that will hit you hard if you don't spend enough time thinking about strategy and making sure that you use those dollars where they count the most for every bank. And unfortunately, every bank will have a different approach.
That's true. So in fact, when we're talking about risk, one other angle is fraud risk, and that's been troubling. That's one fact that a lot of banks have been bothered about. That's one of the top of the mind priority. In fact, we have a couple of questions from our audience as well. So probably I'll request Ramu to briefly answer this because you touched upon identity and biometrics earlier. So facing the rise of social engineering fraud, is two-factor authentication sufficient? Or should banks look for three-factor authentication using biometrics such as behavioral biometrics? Ramu, your views, and then maybe anybody else if they want to briefly. We have limited time, so we'll keep it short answers, please.
I would strongly recommend to move slowly into a multi-factor authentication. One of the key aspects is biometric. The simplest thing to go to market is your touch IDs using your finger. The second, if you can enable face detections, because most of your technology, both web and mobile, can allow you, even your ATMs can be enhanced with face-based biometric. That's a second. A third advantage, if you can have little more high technology, sophisticated customer base, move into voice. Today, all these three technologies are enabled. All you need is a better algorithm to build, apart from your SMS, OTP, and PIN. You can bring this biometric on top of tokenizations. If you can bring tied together with the different use cases, it will be the end user touch points are much more secure. And yeah, that's my recommendations.
Okay. We have another question. Maybe Henry Aguda, you can take that. How can we leverage on technology such as AI to better manage or prevent the emerging incidents of fraud in digital banking? So Henry or anybody else who wants to address this?
Well, so for our bank, we apply AI in terms of usage patterns. We don't just use it for fraud, we also do it for AMLA monitoring. And the problem for detecting fraud is the number of incidents you have to go through before you find the proverbial needle in the haystack. So AI allows us to optimize the limited resources we have, and they filter away the ones that are going to be false positive. So that's one very good use of AI, allowing us to filter away the non-critical transactions that our people can concentrate on the ones with the higher chance of being fraud or being enough.
Okay. So got it. Okay. So, and we have one more question from audience, and this is much more focused around the strategic direction. So maybe Noel, if I can put this question to you, or if anybody else, one of the panelists, they want to answer it. It's about the resistance to change in digital transformation initiative, and that's a challenge which almost all banks face. So. How has been the adoption of these changes that you brought about? And was there a resistance to change? And what steps did you take to ensure that such initiatives met the expected outcome that you were targeting?
Yeah, internally, we have seen minimum resistance. We have more resistance in getting the vaccine than the digital transformation. So, because our own internal people have seen the value of what it's doing, not only for them, but also the client. Their client is telling them that what we have built for them really helped their day-to-day activities, right? So, and by doing so, they also become, they embrace the digitalization, the transformation, and thereby creating them as our evangelists. In fact, some of our most, the people that is most resistant in the past, after they have learned, after they've listened to customers' testimony, ended up being our evangelists and really showcasing their experience of a certain age group. Let's say it's as easy as watching a Netflix. No, if you can run Facebook, you can do Netflix. It can be done. So resistance-wise, it was never an issue for us.
Okay.
I'll probably chime in there.
Yes, please.
From a mid-sized bank that is very focused on very defined niche in terms of clients, we do experience resistance. And the one thing that we do in RCBC is to make sure that people are exposed to the technology that we're developing, because we can't sell what we don't know. And therefore, all relationship managers, all people in the back office, they have to have the online banking accounts. They have to utilize, the various web portals we use to update customer information. We make sure that they experience all the applications that we're setting up. And really, I don't think there's a short way of, or short-circuiting that process of maturity. The only best way to do it is to really expose the people, make them feel comfortable, and make the application very user-friendly. And that's really been our focus more and more now, is to ensure that everything that we do is extremely user-friendly. It's extremely intuitive, even when we're using productivity tools for our relationship managers, because we want to make sure that they focus not on the technology or the functionality, but they focus on the job, which is really to serve our clients and do more acquisitions.
Okay. Okay. So yeah, so essentially focused a lot more, channelizing the entire processes towards customer centricity and to ensure that there's a better acquisition of customers, better convenience for customers and personalization. That's true. So okay. So at this, I mean, I can see that we have only limited time. So probably a quick question to John about the kind of business impact that they have been able to bring about with digitizing of their core lending, deposits, and payments. And if you could just talk some of the areas where you've how did you bring about the maximum impact and you were able to achieve your targets that you've set about for digitization? So a quick comment on that, please. Yeah.
Well, it was all about, I guess, flexibility and agility to adapt to the requirements of our customers and partners. We've reinvented ourselves over the last 5 years as an ecosystem bank. And so in order to be successful at that, we'd had to service the different requirements of different conglomerates and corporates in their upstream and downstream financial transactions, upstream to suppliers and their own ecosystems, and downstream to their retail or corporate customers. So the flows, the financial flows, the flows of information had to be facilitated by laying the groundwork via digital infrastructure, independent of the traditional brick and mortar touch points that we had, and in fact, extending that so that we could service the ecosystems.
Okay. Yeah. So upstream and downstream extension. Yeah. I mean, so integration, that's quite important part. Got it. All right. Okay. So Maiya, a quick comment from you as well. And, talking about, moving towards the digital future that for Philippines Bank specifically, I would love to hear from you a quick wrap-up comment about how banks could be digital future ready in this evolving and dynamic environment, operating environment that they have. So we've heard varied views from bankers, and as well as the challenges that they've faced with regards to various aspects of technology, the business requirement, the resistance to change. So a quick comment from you as well.
Thanks, Niti. See, from our own experience, what we have seen is two important trends are taking place. One is in terms of increasingly the power is going to the endpoints. When I say endpoints, it is basically the end consumers or the retail, corporate, or SMEs. The second trend that we're observing is the banking is more of an experience and less of banking. So with these two things, and combined with the global population demography, look at more than 60% of the global population is less than 30 years of age, and it is even more skewed in countries in Southeast Asia, and Philippines is no exception to it. And when these people have about 80% of them are connected to the internet and to social media and things like that, they would expect that a similar experience is provided in their banking journey also. So banking has to be part and parcel of in their day-to-day life. And they did not have to go to a bank or go to a branch or go to an ATM. It should be just like how easy for them to order something using an app on their phone, either for a taxi hailing or in terms of the food delivery or in terms of groceries, in terms of movie tickets. I think the life of banking will become like that. So it is going to be a part and parcel of their everyday life. So from that perspective, the banks are now looking at moving towards that kind of an expectation matching by the infrastructure. When I say infrastructure, it includes two sets of infrastructure. One is in terms of the market infrastructure, which is the basic responsibility of the local regulatory authorities and the government to provide in terms of proper broadband network, in terms of the regulatory environment. And we have seen this happening in India with the market infrastructure, like a single identity, electronically you can do a KYC, and because of which entities are able to now add more than 100 million, 200 million customers within 2 minutes, 3 minutes for each customer. And similarly, we have also seen leveraging the network in terms of the broadband, in terms of the bandwidth. So these are all coming together for the customer's expectation to be met, and banks cannot stay behind in this journey. And it is the requirement of day that they need to now look at how to meet the trend of increasingly power moving to the endpoints, and as well as making sure that banking is more of an experience and less of banking. These are the two things that we are looking at, digital taking to the next step. I'll pause here.
Okay, great. So I think we're running out of time, so I'd like to wrap it up now. So it's been a very wide-ranging and engaging, insightful discussion, I would say. So and we've covered a variety of topics. It's clear from our discussion today that banks in Philippines have been very progressive in their digital transformation, in cloud adoption as well. So many of the banks are, and this is driven by the strong regulatory support that banks have been getting as well. So they have adopted to cloud transformation quite progressively and aggressively. The institutions are actively shifting their cloud migration toward core banking and core technology to be migrated to cloud for greater efficiency, scale, and agility. Of course, there are challenges that we heard about, especially if it's an existing bank with a legacy. So therefore, there are a fair amount of challenges that needs to be addressed in the process. There, we also talked about the IT concentration risk, different models that banks are adopting with regards to cloud adoption, whether it's a digital arm or a completely new digital bank, or just shifting a part of your technology onto cloud. So there are various models that we talked about as well. We also talked about emerging technologies such as AI, RPA, open banking, how these are being used by banks to bring about the business impact, the customer experience that they are looking for. Interestingly, the fraud risk is another area that, and as well as cybersecurity risks. So those are some of the other risks that that banks are talking about and how they are addressing. So that's the other angle we covered. During our session, we did a survey and we asked our audience about how, if they are investing into digital transformation, and 88% said yes. So, which kind of shows that there's a very strong focus across banks, especially in Philippines, towards digital transformation. So great. With that, I would like to end today's session. I want to thank Ramu, Mr. Henry Aguda, Henry Antonio, Jean, Noel, Maiya, and all the guests for joining us today. We hope that our audience have benefited from your insight and your experience. A recording of today's session would be available on the Radio Finance website for download and playback. Please do register for our upcoming Radio Finance sessions as well. So thank you so much, everyone. Have a good day. Stay safe.
Thank you.
Thank you.
Thank you.
Bye-bye.